Hey everyone, welcome back to Chipstock Investor. I'm Kasey.
And I'm Nick.
Today we're going to be talking about CoreWeave. They had their very first earnings report and earnings call after their IPO. We'll discuss that, break it down, and talk about maybe some flags that we see in CoreWeave.
Yellow flags, to be specific.
CoreWeave fits into our semiconductor industry flow. On the very right side of our chart, tech devices and equipment company. CoreWeave is AI data center infrastructure.
Yep, top supplier, of course, Nvidia. The top user of CoreWeave's infrastructure, Microsoft. Also the deal with OpenAI that was announced. Let's break it down. We shared this when we did the pre-IPO deep dive on CoreWeave. Big expectations for data center infrastructure and application infrastructure services this year. More than 20% growth expected in 2025. And that infrastructure will make up by far the largest part of cloud infrastructure and user spending at this point. Well over $400 billion worldwide is expected.
We've been talking a lot about cloud infrastructure over on the Discord server. You can get access to that via a Semiconductor Insider membership.
Check the link in the description below to get access to that. Currently just $120 a year. Check it out. Join us over there. Lots of discussion on investing in the entire electronics supply chain, including CoreWeave and some of its peers. So what are these businesses exactly? Cloud infrastructure, of course, got started with Amazon AWS. Now we have Microsoft Azure, Alphabet, Google Cloud, Oracle Cloud, so on and so forth. These are computing for rent services. Think of it as like a 21st century style utility. And because these businesses are so financially successful, it's attracted a lot of competition, especially with accelerated computing now being such a big deal. So we have these neo cloud companies, some of the publicly traded ones, CoreWeave, Nebius, Applied Digital, DigitalOcean. On the right, those are privately owned businesses, Lambda and Crusoe. But let's talk about CoreWeave and their first report as a public company.
All right, here's their general numbers. Pretty impressive, over 400% year-over-year revenue growth. They came in at 982 million. But remember, they're scaling off of a very small number from a year ago, so that's why there's such a huge percentage change. And the biggest question that we have highlighted was the capital expenditures. This was Q1, they spent 1.9 billion. But what is going to be the full year capital expenditures and how are they going to pay for that? And one of those questions we got an answer for.
One of two. We're going to come back to that at the very end of this presentation. Let's talk about the actual operating performance of the business for just a moment, because there is clearly some impressive operating leverage at work, as we highlighted during the deep dive 2 months ago at this point. On an adjusted operating basis, 17% margin, up from 13% last year. So there's good leverage still in the business model. And then adjusted EBITDA, which of course further backs out depreciation and amortization. Depreciation, the biggest segment of this that gets backed out, that's depreciation of the data center equipment itself. So that would be like Nvidia Blackwell systems. They get paid for in cash. That's the CapEx. But then for tax reporting reasons, that equipment gets depreciated over time. And that depreciation expense is non-cash because it was already paid for. This is just for tax reporting purposes. So we back that out to get adjusted EBITDA. And obviously the margin is still very good, 62% compared to 55% a year ago. So even the neo clouds exhibiting some of the powerful financial model that the traditional cloud and data center providers have exhibited.
This is from their pre-IPO filing on their remaining performance obligations. Said 15.1 billion at that time. And then here's an update on that in this quarterly report. The RPOs are just a skosh under 15 billion. And so they decided to add in another metric to give the total revenue backlog, that other line item there that says other amounts of estimated future revenue recognized from existing committed customer contracts. they added that number in to give us a revenue backlog of over 25 billion. But it's important to note that neither of these numbers are on a balance sheet. So you can take these with a grain of salt. These are long-term customer commitments that probably do have some cancelable portions of the contract.
Okay. So that's maybe a bit of a yellow flag. Just file that away for future quarterly earnings if you're invested in the neoclouds. But let's get to the real nitty gritty here. We had two questions going in to this Q1 update. What is the capital expenditure outlook for CoreWeave for 2025? Because remember, all of the cloud providers give their capital expenditure outlook. Google, Meta, Microsoft, Amazon, they all give that number. So CoreWeave should as well. And the second question, how are they going to pay for those capital expenditures? And this was the reason for the IPO. One of the reasons for the IPO, CoreWeave needed to raise cash to pay for that CapEx. But after March, at the conclusion of Q1, they don't have a lot of cash left after the IPO. 1.3 billion in cash and equivalents. And you can see the debt balance, nearly $9 billion. And then in the course of Q1, they burned through another 1.35 billion. That the free cash flow was negative. There's some other financing line items that took place as well. But ultimately, the free cash flow, deeply negative. So they have, on balance at the end of Q1, basically 1 quarter's worth of cash remaining. And so here's the question.
What's the CapEx going to be and how are they going to pay for it?
Q2 guidance for CapEx, 3 to 3.5 billion. So more than double what they did in Q1. And then for full year 2025, 20 to 23 billion in total. So just the second half of 2025, they're going to be spending upwards of 15 billion or more in CapEx. Obviously, that's fantastic news for Nvidia. That means Nvidia's probably got a $15 billion Blackwell customer in CoreWeave alone the second half of this year. We mentioned there's possible re-acceleration in the accelerated computing end market for chips. Here's another indicator that is, in fact, likely to happen. And that's great news for Nvidia. But for CoreWeave, they don't have enough money on balance. So they have two places to go get that cash. They can raise more debt, but there's a problem with that. They already have about 9 billion in debt on the books. The interest expense related with that debt was like well over $200 million just in Q1 alone. That's 27% of revenue. So they can't just raise debt indefinitely. That's not an infinitely scalable model. So the other option is they could maybe raise cash by selling more stock. That's another reason why they IPO'd. Now they have a public market, but at 20 to 23 billion just this year in capital expenditures, if they were to raise that via issuing new stock, that's 70% of the current market cap of $31 billion. Investors are not going to look on that too favorably if CoreWeave raises that much cash via issuing new stock. That's massive dilution. So CoreWeave is in a pickle here. This question was actually squeezed in at the very end of the call. An analyst just got bold enough to ask, how are you going to pay for this? And CoreWeave management did not answer the question. Huge red flag for us. So we're glad that we sat out buying CoreWeave. And honestly, this is going to be a similar problem facing Nebius as well, which we took a very tiny experimental position in. We're up like 60, 70% on that in the last month. And we may take the profit off the table on that position and just lock that in ahead of earnings.
Hey, everybody. Welcome back to Chipstock Investor. I'm Kasey.
And I'm Nick.
Still Nick.
I actually wasn't thinking about that before I said that. I just was thinking about what we're talking about today. And then you looked at me. So anyways, yeah, I'm Nick. Hey, I'm still Nick. And we're going to still be talking.
Maybe let's start over.
No, today we're still definitely talking about CoreWeave, right?
We're definitely talking about CoreWeave.
Okay, at least I've got that correct.